it really is a tale of two stories, with some of our company growing and working at breakneck speed to produce as many critical care ventilators, monitors, and diagnostic equipment as we possibly can. And at the same time, we see a slowdown in elective procedures, for example, that can be postponed by hospitals, as well as, of course, the consumer business that is affected as consumers buy fewer products. We first saw this happening in China, then in Europe, and now across the world. And we expect this impact to become a bit bigger in the second quarter, as we then will see the depth of the pandemic globally. At the same time, our order book is strong, and we expect a gradual resumption of consumer sentiment, as we could already start to see in China, in fact. And that also gives us confidence to say that the second half of the year will likely be showing a positive revenue growth. Of course, that does take several assumptions, like the resumption of elective procedures, consumers becoming more confident, and hospitals allowing us to install that strong order book as we go.
Frans, I never thought I'd have to ask you how resilient your company is, but I'm just looking at your free cash flow numbers. You've had free cash outflow of 57 million euros versus outflow of 206 a year ago. How well resourced is this company if we do have to weather more lockdowns over coming months? Do you need to tap government support?
We do not expect that we need to tap government support at this time. We have a strong liquidity position. We have, of course, taken additional measures. We have issued a bond in the first quarter. Secondly, we have taken measures to safeguard our cash positions. We will go to the shareholders to transform the dividend into an all-share dividend. We are keeping the dividend over 2019, it's important to underline. And altogether, we feel confident about the resilience that Philips represents.
Frans, very good morning to you. Strange times, my friend, but needs us must, I guess. Can I ask you, you mentioned the slight improvement that you're seeing in your Asia business and China specifically, as China now begins, we think, to come through the other side of coronavirus 19. Can I ask you to put a bit more flesh on that story? Because I think we're all keen to understand whether there is a template that we in the West can follow. And I was a little disappointed to see actually the rebound in retail sales in the last data was not as strong as some had been expecting. So it does raise questions about whether it's a V-shape, a U-shape or an L-shape recovery we have in prospect.
Yeah, that's a great question. Well, in China, we have seen that online sales through online retailers is resuming much faster than consumer sales in retail brick and mortar stores, where the streets in China are still quite empty. And so the online sales is not yet fully back to normal levels, but getting there. What that means for the Western world, of course, is too early to say, but I would assume that also in the Western world, the online revenue will recover faster than the high street sales. On your question of, what kind of a recovery is it? I would say that what we see for 2020 should not be a proxy for the world economy recovery. And that has to do with the fact that we have a strong order book. Customers, hospitals have postponed some installations from the first half into the second half as they were focused on dealing with the pandemic. Moreover, we have, let's say, some of that crisis demand on ventilators and monitors that will support the revenue growth. That makes us expecting a strong second half of the year and an overall modest revenue growth for the whole year. But as I said, that doesn't say much yet about how the economy will recover overall. We are all concerned that this has a major impact on the world economy.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.